Vistra Group has just lost 55% of its profits in only 6 months. 55%. These are not reckless builders who don't know what they are doing. They own Bovis Homes, Countryside, and Linden. They have been building houses across the UK for decades. Yet they are hemorrhaging money at a rate that should terrify anyone who still believes the UK housing market is stable. But here is the part that truly matters. While these major builders are struggling, the government is still promising to deliver 1.5 million new homes. With what funding, and built by whom? The very companies expected to construct these homes cannot even meet their own financial obligations. This is not just another corporate earnings story you can scroll past. When house builders start going broke, it affects everyone across the economy. This is why people cannot buy homes. This is why rents continue to rise. This is why government housing promises rarely become reality. I have been analyzing the numbers, speaking to insiders across the industry, and what I discovered is far worse than what is being publicly admitted. This is not a short-term issue. It will not simply resolve itself when interest rates fall. This represents a structural failure across the entire housing sector. Let's start with Vistra, because their results give us a clear window into this unfolding crisis. Pre-tax profits have fallen to £40 million. That might sound like a healthy figure, but they were £90 million during the same period last year. This is not a minor decline. This is a financial collapse. Their order book, meaning homes buyers have already committed to purchasing, is shrinking. Think about that carefully. In the middle of a severe housing shortage, one of the UK's largest builders cannot find enough buyers. How is that possible? The answer is simple. People cannot afford the homes being built. The average UK salary sits around £33,000, while the average new build home costs roughly £280,000. That is more than 8.5 times annual income. Banks will not lend at those multiples. Even if they did, the monthly repayments would crush anyone earning an average wage. As a result, Vistra and every other major builder are trapped. If they lower prices, they lose money on every unit. If they keep prices high, nobody buys. There is no viable middle ground. And the situation is even worse. Construction costs have not fallen. Land prices remain high. Labor costs have risen by around 30%, while material costs are still elevated. Builder margins have been completely destroyed. A quantity surveyor I spoke to recently shared the real figures. On a typical £250,000 home, profits once sat between £30,000 and £40,000. Today, builders are lucky to make £10,000, and on some sites they are losing money on every sale. Tight planning rules and weak productivity further squeeze margins. Something else is happening that few are openly discussing. Buyers have gone on strike. Not officially and not in an organized way, but they have stopped buying. Estate agents are reporting the lowest viewing numbers since 2008, not because people do not want homes, but because they no longer trust the system. Put yourself in the buyer's position. You save for years to build a deposit. You finally reach 10%. You apply for a mortgage. The bank offers 4 to 4.5 times your salary at roughly 7% interest. You do the maths. The mortgage alone consumes around 60% of your take-home pay. Add council tax, utilities, and maintenance, and you are left with nothing. So buyers are doing something unprecedented. They are walking away. They are saying no and choosing to wait. This has never happened at this scale. Even during 2008, buyers believed prices would recover and conditions would improve. Not anymore. People have recognized a deeper truth. The UK housing market is fundamentally broken. The psychological shift is enormous. Once people stop believing property prices always rise, once they stop believing they must buy at any cost, the entire model collapses. That is exactly what is happening. And here is what builders do not want you to know. At today's prices and costs, they simply cannot build houses profitably. Not anymore. Not at scale. And certainly not at prices ordinary people can afford. I have seen internal documents from 3 major house builders. I will not name them, but their break-even point on a standard 3-bedroom house is around £220,000. The maximum price the market can realistically absorb in most areas is about £250,000. That £30,000 margin disappears instantly with a single delay, one planning issue, one rise in material costs, or one construction error. Construction sites across the country are quietly shutting down. Not officially announced, but visible to anyone who looks closely. Visit new developments and count the workers. Sites that should have 50 people operating now have 10. Developments that should be active Monday through Friday are silent 3 days a week. This slowdown is not accidental. It is financial stress playing out on the ground. Subcontractors are collapsing first. Plastering firms, roofing companies, groundwork contractors. They are not being paid because major developers are facing severe cash flow pressure. When subcontractors go bust, work stops. When work stops, homes are not completed. When homes are not completed, the housing shortage deepens. This is basic economic chain failure, not speculation. But here is the real problem. Builders have already spent billions acquiring land banks, assuming homes could be built and sold profitably. That land is now worth less than what they paid for it. They cannot build without losses. They cannot sell the land without writing down massive values. These are stranded assets sitting on balance sheets. Persimmon alone controls land for around 90,000 homes. At current build rates, that represents 15 years of supply. 15 years of capital earning nothing while financing costs continue to rise. Labour has promised 5 million new homes by 2029. Let's do the numbers properly. That requires 300,000 homes every year. Last year, the entire industry delivered around 170,000 homes, not because builders chose to slow down, but because that is near maximum operational capacity under current conditions. To reach 300,000, the industry would need almost double the workforce, materials, equipment, and output in a sector that is currently shrinking, not expanding. Even if capacity could be created overnight, who would buy these homes? At current prices, there are not 300,000 qualified buyers each year. Mortgage approval data confirms this. We are running at roughly 60,000 approvals per month, around 720,000 annually, but nearly half are remortgaged or existing owners moving homes. Genuine new buyers across the entire market sit closer to 300,000 per year, not just for new builds. The government knows this. They have access to the same data, likely more detailed. So why make promises that cannot be delivered? Because admitting the truth, that the housing crisis is unsolvable under current economic conditions, would be political suicide. It is easier to promise targets and hope nobody checks the maths. When new homes are not built, the rental market explodes, and it already is. Rental supply has fallen by around 40% in major cities. Not only because landlords are selling, but because properties that should exist simply do not. The new builds meant to expand rental supply are not being delivered. This creates a self-reinforcing cycle. Rents rise. Saving for deposits becomes impossible. Buying remains out of reach. Renting continues. Rents rise further. Here is what few people truly understand. Institutional investors are waiting. BlackRock, Vanguard, major pension funds. They are not buying today. They are waiting for distress. When builders like Vistry, Persimmon, or Taylor Wimpey finally break, these funds will step in, acquire land banks cheaply, and develop large-scale rental-only schemes. Build-to-rent, they call it. In reality, it is build-to-lockout. Entire developments where ownership is not an option. This future is already being constructed while public attention remains fixed on political promises. The builders know this is coming. That is why they are not fighting harder to survive. Some executives are likely already negotiating exits with the same funds that will acquire the assets. The builder crisis is now tearing through the entire supply chain. Brick manufacturers, timber suppliers, cement producers, all are interconnected. When builders stop building, orders collapse. Istock, one of the UK's key suppliers, is already showing the strain. The biggest brick manufacturers have now started announcing plant closures. Major producers are shutting facilities. Marshalls, which makes paving and concrete products, has issued a profit warning. Forterra has announced further closures. These companies employ thousands of workers. When these plants shut down, those jobs do not come back. But the damage goes far beyond employment losses. These are highly specialized facilities. You cannot simply switch them back on when demand returns. Once a brick factory closes, it is effectively gone forever. The productive capacity is permanently destroyed. Even if the housing market recovers in the future, the UK will no longer have the ability to supply the materials required. That shortage will be structural, not cyclical. The timber situation is even worse. The UK imports the majority of its construction timber. Overseas, suppliers depend on predictable, long-term orders to keep supply chains functioning. When UK builders stop ordering, those suppliers redirect capacity to other countries. Once that happens, getting supply back becomes extremely difficult, if not impossible. This is creating a classic industrial doom loop. Reduced supply capacity pushes material prices higher. Higher material prices make construction unprofitable. Unprofitable construction reduces demand for materials. Reduced demand triggers more plant closures. More closures reduce capacity further. The cycle feeds on itself until the industry collapses entirely. There is another issue no one in government wants to openly address. Construction workers are leaving. Not just the industry, but the country. Brexit ended free movement. The Eastern European workforce that built much of Britain over the past 2 decades has either returned home or moved to countries like Germany. The skill shortage is now critical. Bricklayers, electricians, plumbers, the trades that actually build homes, are in short supply. Day rates have doubled in some trades. That sounds positive, but it is not. Work is inconsistent. 2 weeks on site, followed by a month with nothing. Average earnings are actually falling. Young people are not entering construction, and there is a clear reason why. Why take on university debt or training costs for a profession that may not exist in 10 years? Apprenticeship numbers have collapsed, down roughly 60% since 2019. The average age of a UK construction worker is now 47. In 10 years, a huge portion of the workforce will retire. There is no replacement pipeline. Without workers, houses cannot be built. It is that simple. All government housing targets are meaningless without labour. The banks are also exposed in ways they do not want discussed. They have lent billions to developers for land purchases and construction finance. Those loans are secured against land values that no longer exist and future sales that are unlikely to happen. I have seen internal risk assessments from 2 major banks. They are projecting that up to 40% of developer loans could default by the end of 2025. That represents billions in losses. But the banks cannot call in those loans. Doing so would trigger immediate collapse across major builders. So instead, they extend and pretend. Loan terms are rolled over. Losses are delayed. On paper, everything looks fine. In reality, it is a disaster being postponed. When it finally breaks, and it will, the banks will need support again. But this time the government is already stretched, with national debt near 100% of GDP. There is no capacity for another 2008-style bailout. The banks know this. That is why development lending has effectively frozen. New development finance approvals are down around 70%. To protect themselves, banks are choking the industry of capital. The damage is uneven across the country, but some regions are already collapsing. In the northeast, house building is down roughly 60%. Many builders have walked away entirely. There are no buyers, no margins, no incentive. In Wales, major sites have been mothballed. Political promises mean nothing when builders refuse to build. The Midlands, once described as the engine of growth, is filled with empty developments and unsold homes, with builders accepting losses of up to 40% just to exit. Even the southeast is struggling. London prices appear resilient, but try selling a new build in places like Reading, Crawley, or Stevenage. Entire developments sit unsold. They resemble ghost towns. The only segment still functioning is central London, and that is driven by international capital seeking safe havens, not British buyers. Even that demand is now weakening. And the official unemployment figures do not yet reflect what is coming. Official figures still fail to capture what is really happening. Construction workers who lose work do not always sign on as unemployed. Most are technically self-employed. No work simply means no income, not unemployment. The real number of people dependent on construction who have lost income is likely closer to 2 million. That includes workers, suppliers, estate agents, mortgage brokers, surveyors, lawyers, and every supporting industry that exists because homes are built. When construction stops, these people do not immediately appear in the statistics. They burn through savings, take on debt, and hope conditions improve. By the time they show up in official data, they are already financially broken. This hidden unemployment is creating a secondary crisis. These households cannot spend, cannot buy homes, and often cannot cover rent. The economic damage spreads outward, hitting the wider economy. Why does this explode in 2025? Because multiple triggers hit at the same time. First, development loans come due. Billions in financing that cannot be renewed because projects are not selling. Second, the government's flagship housing target is missed dramatically, creating political pressure that becomes impossible to manage. Third, major builders simply run out of cash. They have been burning reserves, and those reserves are almost gone. Fourth, the spring selling season fails. When homes do not sell in spring, panic follows. Fifth, interest rates remain higher than expected. The promised cuts either do not happen or do not help. When all five pressures hit simultaneously, the crisis shifts from slow motion to real time. What looked manageable suddenly collapses. In every crisis, some players benefit. Here is who wins. Institutional investors with long-term capital. When builders collapse, they buy land banks at steep discounts, wait years, then build vast rental portfolios. Foreign sovereign wealth funds are already positioning. When UK builders fail, overseas capital moves in. Cash buyers thrive when mortgages disappear. Large corporations also benefit. Logistics firms, retailers, and companies needing worker accommodation will purchase failed developments and convert them into housing tied to employment. Modern company towns. The winners are not British families trying to buy homes. They are global investors accumulating assets. This is not a temporary problem that resolves itself. The core model is broken. Homes cost too much to build relative to what people can pay. That gap is not closing. It is widening. The workforce is shrinking. The supply chain is failing. Financing is drying up. Buyers cannot afford prices. Government intervention is limited. We are watching the end of private house building as it has existed in the UK. What replaces it? Likely state-directed construction. Government as developer. Expanded social housing, because private housing becomes unviable. This is not speculation. It is the only mathematical outcome when private builders cannot operate profitably. Vistry's profit collapse is not a corporate headline. It is the canary in the coal mine. The first visible casualty of a systemic failure. When builders cannot build profitably, they stop building. When building stops, supply collapses. When supply collapses, prices rise. When prices rise, fewer people can buy. When fewer people buy, builders lose more money. The death spiral accelerates. The promise of 1.5 million homes is fantasy. The idea that the market fixes itself is impossible. Recovery without fundamental restructuring will not happen. If you are waiting to buy, you may be waiting indefinitely. If you are planning to sell, time is not on your side. If you are renting, prepare for long-term renting. The UK house building industry is not just struggling. It is dying. And when it fails, it takes the housing ambitions of millions with it. This is not pessimism. It is mathematics. And mathematics does not care about government promises or corporate press releases. The builders are going broke.